Q1 results as well as the HP revenue. So let's listen in.
In fact, Reema, if you recall, when we announced the results of Q4, I had mentioned that HP revenue decline will start stabilizing around Q2, and which is what we are saying. We believe it will start stabilizing. There is every indication, and the decline would be marginal. In some cases, we may even grow.
Okay. So largely on HP revenue should be on the flatter side.
That's right.
Okay. Surya, let me come to you on the margins. Margins have improved by 70 basis points quarter on quarter at 15.2%. You're closer to your upper end of the guidance of 14 to 16% that you laid out for the first half of FY17. Would you look to up your guidance? And what's the outlook on margins in the second half of the year?
At present, we are not planning to change the guidance. We'll be in the 14 to 16, on the upper side of 14 to 16. And for H2, of course, we have the wage hike MSI coming in Q3. So in line with that, we still will be in the range between 14 to 16 on the upper side of the margins.
For the full year also?
For the full year also.
Okay, so you're extending your margin guidance of 14 to 16% for the full year?
Yes.
Okay. Let me come back to the revenue growth. We spoke about HP, but that's only 23% of the company's overall revenue. Let me break up the rest of the revenue into three brackets. One is your core direct international, which is just what, 57% of the revenues, digital risk 16%, and the rest is ATM. Take us through the outlook as you see on all these three verticals for segments for the rest of the year.
Right. So if you look at direct international, it is made up of three segments. One is direct core, second one is digital risk, third one is our product portfolio group. So if you look at direct core, our guidance is we will definitely grow faster than the market. Now you are seeing that the market is kind of slowing down, because if you look at the results of other companies, you are beginning to notice a decline in their growth rates and decline in their profitability. But we are holding firm as far as our direct core business is concerned, that we will grow faster than the market. Even this quarter, we have grown 23% year over year. So that is for sure. Digital risk, the revenue is stabilizing around $35 million. That's very important to us, to have a stability in revenue rather than the volatility which we are traditionally used to in digital risk. So that's our focus. We believe it will operate in the region of 35 million for coming quarters. We are certainly working to see whether we can lift the game beyond 35, but at this stage I can only talk about $35 million. Then our product portfolio group is a small business that would be kind of, you will have a bit of highs and lows. That does not significantly impact our overall company revenue. So overall, direct international in good shape. And the 2.5%, if you look at 2 quarters ago, we had done, at a company level, we had done something like $68 million of total contract value. That guides the revenue for the current quarter. Now, if you look at this quarter, we have added $96 million. So what it does is it gives you a line of sight to revenue growth 2 quarters from now, so which is good news.
Okay, but so basically what you're saying is that digital risk will stabilize at $35 million. HP should be stable from here on. Let's assume flattish for the sake of simplicity.
Sure.
Growth is predominantly going to come only from core digital, core direct international, which is sub 60% of your overall revenues. So even if that grows above the industry, could you tell us on a consolidated basis what your expectation is for Mphasis dollar revenue growth for the full year?
See, Reema, what the consolidated basis somehow projects an image of a company which is kind of stagnated. Whereas what we are doing is we are winning big in newer areas. We are improving our profits. So Surya mentioned earlier, we have improved 70 basis points this quarter in terms of EBIT. And we are clearly trending closer towards the upper end of our guidance. So overall, it is a business which is humming, winning in newer areas, while overall company growth rate would be probably in the 5 to 10% range.
Okay. What about on corporate action? Surya, you are sitting on $450 million of cash. I understand that there is the whole integration of Blackstone, etc. But any possibility of a special dividend or a buyback that the company could announce once the Blackstone integration is over?
As mentioned earlier, Blackstone had, in fact, in their documentation to the SEBI, had talked about a possible buyback and special dividend.
Right.
So we'll wait for the close and then we'll decide.
But what percentage of the cash balance would you be comfortable using for a special dividend or a buyback?
I think this is a decision anyway the new owner has to take. But I think for a working capital, about 150 to 200 million is good enough. But also we have to keep in mind whether we need to do some tuck-in investments. So we have to keep a long-term view before making such decisions.
Is there an acquisition on the anvil, a tuck-in acquisition?
See, it's a tough act, Reema, to be honest. We are looking, we have been looking, and we are very careful because the fact remains acquisitions don't generate the kind of returns which people expect.
Okay, so that's the Mphasis management saying that in spite of the wage hikes, they expect to retain their their margin guidance, but not giving away much in terms of acquisitions.